For years, Saudi Arabia operated on a very specific premise. Money is no object. If a city needed to be built from scratch in the deep desert, it would be built. If the future looked physically impossible, they would fund it anyway. Take the Muqab. This was the centerpiece of a $50 billion downtown district designed to reinvent Riyadh as a global capital of culture and technology. The physical scale of this project defies standard architecture. It was designed as a cube measuring 1,300 feet tall, 1,300 feet wide, and 1,300 feet deep. You could fit 20 Empire State Buildings inside of it. Then there was NEOM, the kingdom's crown jewel. The focus of this project was The Line, a planned 170-kilometer-long mirrored city stretching entirely across this barren coastal desert. The deadline for these projects was the year 2030. The kingdom intended to prove it could buy the future, using its vast wealth to build a global capital in a single decade. But recently, the construction has stalled. Reports indicate the Muqab project has been shelved because the government is uncertain if the returns make financial sense. NEOM is also being redesigned. The 170-kilometer mirrored city is being scaled back to a fraction of its original length, and the 2030 timeline is slipping toward 2040. At the same time, the Saudi government has started approaching its wealthiest domestic families, asking them to invest their own capital to keep these projects afloat. Saudi Arabia still sits on an ocean of oil wealth, but while the reserves remain deep, the state is running out of easy cash, forcing a pullback from its most ambitious plans. To understand the cash problem, we have to look at how that wealth was built. Before 1950, Saudi Arabia was a desert state, where safe drinking water was a luxury. The discovery of crude oil paid for modern infrastructure and granted the kingdom immense geopolitical power. But that success created a structural vulnerability. This chart shows Saudi Arabia's total exports. Today, 85% of everything they sell to the world comes from oil. Economists call this the Dutch disease. When a nation relies on a single, highly profitable export, like oil, the foreign demand drives up the value of the national currency. This makes other local goods too expensive for foreign buyers, pricing domestic manufacturing and alternative industries out of the market. Because private industry struggles to compete, the state absorbs the workforce. Today, the vast majority of working Saudis are civil servants, receiving paychecks directly funded by government oil revenue. This leaves the entire nation's budget at the mercy of global markets. When oil prices can double and halve in a matter of years, long-term economic planning becomes nearly impossible. Crown Prince Mohammed bin Salman recognized this trap. In 2016, he introduced Vision 2030, an escape plan to transition the country toward a diversified private sector economy. The strategy targets specific growth industries, like phosphate mining, and a push to quadruple the number of annual religious tourists visiting Mecca. To fund this, the government transformed its public investment fund, the PIF, into a global player. The fund began buying stakes in tech companies, Uber, and sports properties like Formula One. On paper, the PIF controls close to $1 trillion in assets. But much of that wealth is locked up in long-term ventures that aren't yet generating the free cash needed to pay for new domestic construction. Look at this gauge comparing oil revenues to budget requirements. Currently, global oil prices are hovering around $60 a barrel. But because the state subsidizes so much of the economy, Saudi Arabia needs prices closer to $100 a barrel just to balance its books. With oil revenues falling short and investment capital tied up, the easy money has dried up. The kingdom is facing a harsh reality check on its largest megaprojects. Saudi Arabia is not going bankrupt. The nation still holds massive oil reserves and low national debt. But the government is shifting its focus away from vanity spending and toward financial pragmatism. The strategy for NEOM is shifting away from mirrored utopias and toward functional, revenue-generating assets, specifically new AI infrastructure and data centers. Capital is being redirected toward initiatives that promise immediate returns, like domestic housing programs, the Expo 2030, and the 2034 World Cup. They are also facing intense regional pressure. Saudi Arabia is competing for private capital against Gulf neighbors like the UAE, who started building out their non-oil economies years earlier. Diversifying a petrostate is a notoriously difficult task. Even nations like Norway still rely on fossil fuels for half of their total export value. Saudi Arabia has not lost its ambition, it has simply met its limits. Surviving the post-oil future requires making hard financial choices today, rather than building illusions for tomorrow.